Exactly 1 week after we speculated on the channel that the Crypto.com team would be exploring a CRO coin burn in the future, we actually saw official confirmation of this burn proposal with a new post from the team. Now, this burn proposal has been the cause of a lot of controversy in the community since it came out, so we're going to break down both the good and the bad for this burn and what it means for the future price action of CRO coin. On April 11th, the Cronos chain team tweeted, "Based on the latest update on CRO supply and inflation, what options do you think chain governance should explore?" Option 1 was to keep the current trajectory, option 2 was to burn more CRO, and option 3 was to increase the inflation. And of the 5,100 votes, we saw 88.1% vote in favor of a CRO burn. The Crypto.com team was quick to hear this, as not even a week later, they did officially announce the new CRO coin burn proposal, and this is the official post here on GitHub. Now, we're not going to exactly go through this entire GitHub post. We're going to give you the most important stuff from the Medium article, break down what this would mean for the tokenomics of CRO coin, the future price action, and why some people are not very happy with this proposal. So here is the Medium post from the Crypto.org team exactly a week later on April 18th, titled "A Straightforward Proposal to Slow Down CRO Inflation and Bring It Closer to Historic Levels." So we can see here that the proposal highlighted is important because at the moment there are 26 billion CRO tokens in circulation, with an annual inflation rate of roughly 2.5%. This means that each year about 646 million CRO tokens are emitted into circulation, and this has a total supply of 30 billion in total. As pointed out in the article, daily emissions have increased a great deal from the original 1 million CRO in March of 2021 to about 1.74 million CRO a day, giving you that 646 million CRO per year. And that definitely does add up over time, as if we look at the original emissions of 1 million CRO per day in 2021, that was about 365 mil CRO per year being emitted onto the markets instead of 646 million. And the team claims this is a result of a technical improvement that led to the Crypto.org blocks being validated faster from about every 6.5 seconds then to around 5.1 seconds now. And more blocks being validated means more of these CRO rewards being handed out to these validators. So the proposed mechanism aims to gradually burn a portion of the CRO rewards emitted to validators. This approach entails allocating a portion of tokens produced through future inflation to a community pool and then burning the collected tokens on a periodic basis. And the anticipated result is a decrease in effective inflation rate, ultimately leading to a more robust CRO token economy. So how does the proposed burning work? Before explaining the burning mechanism, we need to first gain an understanding of how current staking and reward mechanisms work on the Crypto.org chain. So step number 1, CRO holders delegate their CRO tokens to validators. Here is a list of the validators on the Crypto.org chain and all the APYs that they are offering, with the highest at the moment being about 10.92%. Step number 2, validators secure the chain by producing and validating blocks based on the number of staked tokens. Step number 3, CRO rewards are received by CRO holders minus the validator commissions. And step number 4 is validators receive CRO commissions from the rewards. So that is the current process and sort of like the reward structure for the Crypto.org chain. And now let's take a look at how the proposed mechanism would work if this burning proposal was to pass. So steps 1 and 2 remain the same. CRO holders delegate CRO tokens to validators, and validators secure the chain by producing and validating blocks based on the number of staked CRO tokens. Step number 3 is where things begin to change, and we do implement the burn proposal, as instead of directly emitting the CRO fully to the validator, some portion of the rewards, about 15% as per this proposal, are redirected to the community pool. So we can see here now that step number 3 has a portion of the CRO rewards, 15% actually going into this orange wallet, which would be the community pool, and eventually a governance vote would send this to a burn address. Step number 4, CRO rewards rewards minus the portion redirected received by CRO holders after deducting validator commissions. Step number 5, validators receive commissions from rewards. And step number 6, CRO and community fund are sent to burn address through governance vote and removed from the circulation completely. So what does this mean for CRO holders? At present, about 20% of the total CRO supply is bonded, with annual rewards of around 646 million CRO distributed to stakers. The staking APY stands at about 13.6%. Now, the proposed burning mechanism is estimated to take approximately 100 million CRO, so 15% of annual rewards, out of circulation in the first year, to reduce the effective inflation rate from 2.5% to around 2.1%. As a result, staking rewards will experience a slight decrease from 13.6 down to 11.5%. Right off the bat, I'm going to say that is not a slight decrease in staking rewards. So if you're going to see a reduction in staking rewards, the actual underlying burn mechanism needs to bring value to CRO holders through price appreciation. Despite the reduced staking rewards in CRO terms, the burning mechanism is designed to enhance the overall token economy by decreasing the circulating supply and selling pressure in the long run. Now, they say here the path to an ultrasound CRO, which means they are actually exploring other options as well. So another approach they are looking at is actually burning a portion of transaction fees, which could be considered in the future. However, the transaction fees of the Crypto.org chain are cheap, meaning that it generates less than 100,000 CRO in transaction fees annually. Burning transactions fees would have an insignificant impact on the emission rate compared to the proposed burning scheme and its scale of 100 million CRO annually. Something else that was suggested here was introducing a fee burning mechanism similar to Ethereum's EIP 1559, which would involve burning a portion of gas fees from Cronos Network's transactions. As Cronos Network grows, this mechanism may pave the way not only for a lower inflation of Cronos token, but a potential deflationary point in the future. Now, this is also something that I do view as pretty much insignificant in the long run, and I'm going to explain exactly why. So, we talk a lot about EIP 1559, and this has had a massive impact on the tokenomics of Ethereum. In the past 217 days, 104,000 Ether has been removed from the float, bringing the current supply down to 120.4 million. However, the way this works is that a portion of Ethereum's transaction fees are burned here, and that is what has caused Ether to flip deflationary as gas fees have risen. But we can take a look at the Ether chart here and notice that Ether is doing about 1 million transactions per day, okay? Now take a look at the Cronos chain. It is doing about 50,000 transactions per day, so about 5% of what Ether is doing, and therefore burning a portion of the transaction fees would not have nearly as meaningful as an impact as it does have on Ethereum. Not to mention, gas fees on Ethereum are much higher than they are on Cronos, which also means that a bigger amount of Ether is burned with every transaction compared to Cronos, where there are less transactions and less gas fees, so less CRO being burned. So personally, I think that both of these ideas for actually burning a portion of transaction fees are pretty much insignificant, and we do need to see some sort of a larger scale burn to really have a big impact on the price action of CRO coin. So at the moment, assuming that the transaction fees and transaction volume remain the same on the Crypto.org and the Cronos chain, I don't really view either of these options as being significant in the future. And what we're going to focus on now is what is actually being proposed in this immediate proposal that is looking to burn about 100 million CRO per year. Now remember, based on this proposal, it effectively means that 15% of rewards that would be going to validators is instead going to go into a community pool and then sent to a burn address, effectively removing about 100 million CRO per year from the float. And if you are a validator, then you definitely have a big issue with this because your rewards are being cut by 15%. And we have seen this here on Twitter from Finland, who is a very big validator on the Crypto.org chain. In fact, we can see here that he has about a 4.853% cumulative share of all CRO staked on the network, with over 231.2 million CRO validated and bonded to his node. Now, he says here on Twitter, proposal is based on false information and a bug and shouldn't move forward like this. If this will be the proposal, it means should 15% of all delegator rewards be burned, and we will certainly be voting no. And here's the bug that he spoke about. So I want to actually get up to the top of this post because it's very interesting actually. And I do want to remind you as well that the reason the Crypto.com team said that the emissions have increased was because of a technical improvement to the Crypto.org blocks being validated faster from every 6.5 seconds then to around 5.1 seconds now. And what Finland is saying here in their GitHub post is that these faster block times were actually caused by undocumented change and a bug in an update as of July of 2021. It was reported to CDC but never commented on or fixed by them. So effectively what he's saying is that if they were to actually fix the block rewards, block times will go to 6+ seconds again, emissions will drop to 500 mil per year, rewards will last for 10 years like originally planned, and no rewards need to be burned. They say here that 100 million CRO per year is just too small of an amount and it will not have any effect on the price. It will have an effect on delegators though, who will instantly lose 15% of their upcoming rewards. It is very hard to explain this to delegators. Yes, we will vote to burning 15% of your rewards and we don't really expect any real benefits to come. So they say here the solution is instead for CDC to burn their CRO and add if the proposal passes, Crypto.com promises to burn X amount of CRO in the next 30 days. Now here's something that I don't particularly disagree with. I actually do think that it would make for a very big statement from Crypto.com to actually go ahead and burn some CRO that's sitting in their own wallet. And honestly, I think that even burning 100 million CRO per year is insignificant when we are looking at a 30 billion total supply. That means it would take 10 years to burn 1 million, aka about 3% of the total CRO supply. And to be honest, that is just not a meaningful burn whatsoever. If we actually go back to the original burn that Crypto.com did here for CRO Coin, that was to reduce the supply from 100 billion down to 30 billion. They burned 70 billion CRO tokens. That is a massive statement from the Crypto.com team that sent the price of this token roaring. And in respect, or in sort of like in comparison, I guess, this second burn proposal is definitely very underwhelming indeed, and something that delegators are not happy about, nor validators, because it's coming at the expense of their 15% rewards here. So we also saw Icy Crow here tweeting, should all CRO delegators lose 15% of their upcoming rewards? Should rewards last only for 8 years, not 10 years like originally planned? This is the easiest no ever. And if I actually take a look here at Icy Crow, we can see that this is another validator on the Crypto.org chain with about 60.4 million CRO stakes, so about a 1.26% share of all CRO. So between Finland and Icy Crow, that is about 6% of all CRO validated and bonded on the chain, both of whom are standing firmly against this burn proposal. So let me know in the YouTube comments down below what you think about the upcoming CRO coin burn proposal. Personally, I do think regardless of what happens with this burn proposal that I am still bullish on CRO coin regardless. I have been even before the burn proposal was suggested. However, if I'm going to see a burn, I definitely would like to see a bigger burn in the billions to actually get the attention of people, as opposed to burning off, a minuscule 100 million CRO per year. So as I said, regardless, I do remain bullish on this project. I still think that the Crypto.com Visa, which is powered by CRO coin, is easily one of the best crypto visas on the market globally. However, I would like to see a more significant burn to bring a lot of attention to the price action of this project. And on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing day. I'm wishing you all an amazing weekend ahead, and I hope to catch you in the next one. Peace out for now.